Good.
Yes.
All right. Sounds good. So what I'll do here, I'll just kind of give a brief explanation to VISIO before I share my screen. I sent everyone a training, not a training, but a VISIO program overview earlier, but just a heads up, right? VISIO is a non-conventional, non-conforming private lender focused exclusively on long-term rental loans. To break that out, when I say non-conventional, non-conforming loan, the big thing for you is that we don't review any personal income in the underwriting process, right? So I never ask for tax returns, pay stubs, W-2s, right? Other than looking at your credit report, the underwriting is based on the property itself, specifically the relationship between the rents and the new mortgage payment, right? For the most part, the property cash flow exceeds our minimums. The property value exceeds our minimums, and there's no required repairs, right? We're in good shape. We allow you to title into an LLC, corporation, or an individual. We don't review any global assets, and we can generally approve someone up to $15 million in loans per month. All right. So we have 3 programs we're going to talk about today, right? Or just 4. So one, we have our 1 to 4 unit, right, rental 360 program that I'll start off with. And we have our 2 to 8 unit multifamily mixed use commercial program, 5 to 8 unit multifamily program. Then we have our small balance commercial stuff, right? So sharing my screen now, I'm going to go ahead and start with our, 1 to 4 unit program, single family deal. Let me see if I can share my screen here. Can everyone see this? Are we good to go? We're good?
We're seeing it.
Yes, we can see it.
Okay, cool. All right, so let's talk about, what we lend on, right? I look at it like this. A lot of people come to me and ask, hey, do I need debt to income, W-2s? Like I said before, no. We're lending primarily on that asset and whether or not it cash flows positively, right? So that's single family, 1 to 4 units, right? Condos, we don't do any condo hotels, no manufactured homes, just strictly residential investment, non-owner occupied rentals only. Now, we typically have, few loan programs, right? What qualifies these persons' loan programs are 2 things. Our qualifications, I'm gonna skip to the bottom here. This is how I kind of talk to the borrower, right? Got to have a 680 credit score. The property has to cash flow positively. Minimum requirement, all right? How do we determine whether it cash flows positively? Is the DSCR, that's debt service coverage ratio, right? It's 1 to 1.2, depending on the property or program we'll talk about later. Another requirement, you got to have 6 months of reserves and 6 months of PITIA, principal, interest, tax, insurance, and the association dues, and be a U.S. citizen, right? Let's talk about our program benefits, right? No doc lender, no proof of income, quick turnaround for hard money loans, right? We ask 30-day season on funds. We don't ask for any source of reserve funds at closing, right? No cap on the number of loans we can do for you here at VISIO. And like I said before, we can invest property under a personal, LLC, or corporation, all right? Scrolling back to the top, we have low program, right? 5-1, 7-1, and a 30-year fixed. We can do 80% on purchases and rate and term refinances. We can do 75% on cash out refinances. Right? We're a leader in the short-term rental space, having 70% of our loans issued in the short-term rental space, right? Unleased properties are okay. And all properties that we lend on, whether that be commercial, mixed use, 5 to 8, everything must be rent ready. And when I say rent ready, it just has to be livable, right? So just no major repairs, right? I can walk into the house and not die. Can my baby crawl around on the floor? Doesn't have to be perfect, but it just has to be livable, right? So we do offer interest only. We have a 10-year interest only available on the 5-1, 7-1, and 30-year fixed. Now, what kind of separates us is that we also have a no DSCR program, right? And what that is, you're going to pay a little bit higher rate. However, we're going to say, we have the full face that say, hey, this doesn't, cash flow positively, but we feel as if, we run our proposal, this person, they're going to make payments in time, and they won't default on loan. So with the full faith with our DSCR program. For that in the 5-1, 7-1, 30-year fixed, right? This is for the single family rental program only. We don't do this on any short-term rental loans. It has to be a long-term rental for the no DSCR program. The property must be leased, right? If it's a refinance and the minimum loan amount is 150, right? We don't do this for any, relatively newer investors. If you're a first-time investor, you have to have a minimum of 12-month mortgage history. Say it again, 80% LTV on purchases, rate and term. Do 75% on cash out refis. Purchases, we can do 80% on purchases, right? Now, with the purchases, we typically do not like to do, anything under, 150 loan amount, right? Because we're a DSCR lender, we're already cutting it close if we're doing, a loan amount under 150 with the DSCR typically, right? Now with rate changes, we oftentimes find ourselves, falling out of that DSCR threshold as rates rise. So I don't like to fall below, a loan amount of 100,000. Right here it says 75 minimum. I'm not going to do a 75 minimum. Has to be a 100 loan amount or better. Right. And then we do have some additional, deals like Coyote County, that's like, Chicago, there's going to be an LTV reduction. In Flint, Michigan, we're going to have an LTV reduction of 5%. And these are our minimums. So for single family residents, that's the one unit, we have a $125,000 minimum, right? On our duplexes, 150, this is loan amount, not property value. 3 unit, 225, 4 unit, $300,000 minimum. Now, one thing we do at VISIO, if you have something that comes in a little under, I'm not going to say, hey, these aren't hard guidelines. Everything we do is extremely flexible, right? Underwriting guidelines, we can try to work some things out. We'll go the extra mile for our brokers. So nothing is kind of set in stone here at VISIO. That's what people appreciate about us. And then lastly, where do we lend? We're based out of Austin, Texas, but I guess it's better to tell you where we don't lend, right? So we lend everywhere, except states that, you go there and there isn't anything for miles and miles and miles, right? And that's like Alaska, Delaware, Idaho, Minnesota, Nevada, North Dakota, South Dakota, Oregon, Rhode Island, Utah, and Vermont. And then, like I said, Detroit and Flint, we won't lend there for certain reasons. But, with that being said, I'm going to, this is a high level overview of our, 1 to 4 unit rental 360 program. I'm going to leave the floor open for questions before I move on to the next one. So I guess I'll, give everyone to about 11:15 to ask any questions. Do we have any? Okay, Mr. Mike, go ahead.
So are we guys close in a trust or a land trust?
So no trust. Can't do any trust. So it's LLC, individual corporation. Now there are no fees associated, with lending to a LLC versus an individual or a corporation. So, but no trust. Can't do a trust.
Are you about to move past DSCR altogether or just onto another product from DSCR?
Can you say that again?
Is this the last of the DSCR talk? I was wondering because I've heard that you guys do Air DNA quotes. Mm-hmm. Is that true?
Yeah, so we do Air DNA quotes. So when I run a quote, that's how I determine whether or not the property is going to cash flow for our short-term rentals, right? So I use a software called Air DNA. Kind of run the Air DNA, say, okay, Air DNA says you're going to get $50,000 a month, a year from this property. I'm going to use that $50,000 to create a quote, and that will tell me whether or not this property cash flows positively. That kind of making sense?
Yeah, absolutely. And can we bring a property to you to ask you about what their DNA says if we're thinking about?
Absolutely.
Perfect.
All I need is the address, and I can run you a quote, no problem.
Awesome.
All right. Anybody else? All right.
So,
that means I must be doing.
I understand that. I'm sorry. So I understand that you don't lend in Cleveland, Ohio. Is that correct?
So we don't lend in Cleveland, Ohio. It's just going to be a LTV reduction of 5%. So we'll lend there. Just we won't be like, for an example, if it was a, purchase, couldn't give you 80%, we have to give you 75. And that's just in that particular county. All right, all right. All right, so I guess I'll go ahead and I'll move over to our next deal. So we have a 2 to 8 unit mixed, use property deal here. Go ahead and open my screen here. And everything is pretty similar to the 1 to 4 unit, right? 680 credit score, property cash flows positively, will lend on it. Now, there are some certain stipulations with the 2 to 8 unit and 5 to 8 unit multifamily deal. Now, let's talk about it. On purchases, we can't give you 80%, right? High LTV is up to 75, right? Again, we're not asking for net operating income. Qualifications are based on whether or not the property cash flows positively and credit score, of course. Now, the loan amounts are a little bit different. Now, the minimum here is $250 to $3 million, right? Still do you up to $15 million a month. However, after $3 million, we're just gonna have to get executive approval. Rates right now, this is a little bit older. So right now we're starting about 5.25 is our base rate. YSP is still available. Now, I want you guys to keep this in mind with our 2 to 8 unit program. This is the main, for the mixed use, right? All of the properties need a current lease if we're gonna lend on it, right? They have to have a current lease, and 50% of the revenue from a mixed use property, it has to come from the residential side. All right. And then our 5 to 8 unit multifamily residential program, 75% LTV as well. Everything else is the same, $250 to $3 million. We don't necessarily need all we don't know how it runs on whether the cash positively based on rent at time of, closing or the proposal. So if, you have 8 units and, only 6 of them are rented out, we can only use the cash flow from the 6 rentals to determine whether or not this property is cash flowing positively. Right? Can't use projections with the 5 to 8 unit. All right, and that's pretty much it there. Everything else is everything. Everything else is the same, sticking true to our asset-based deal, right? We're lending on your credit score and whether or not the property cash flows positively, right? And that's pretty much it. So
I got a question
again,
on that for you.
Okay, perfect.
Say you have an 8-unit building, or maybe it's 4 apartments and two commercial spaces, and say one of the commercial spaces is like in disrepair, so you don't have a lease on that area of the building. Is that all right that it is in disrepair and it would need some fixing up, as long as the cash flows positively?
Yeah, as long as it cash flows positively, as long as there isn't any major repairs, we'll lend on it, right? And like I said, everything we do is subject to executive approval. So let's say you did bring it in, because like I said, typically we need the leases for all, but let's say you have a weird instance like that, still submit it, right? We'll talk it over. We'll say, okay, based on the area, the borrower's history, the population, what's the likelihood that this is a good investment? If we determine, hey, it's a good investment, we'll still lend on the property.
Okay. And you're going to want to see some history of being an investor for this type of product?
No, not typically, but investor experience always helps. Always helps, especially with those enhanced reviews. And so this program and the small balance commercial program that we're going to talk about soon, they're going to be a little bit more expensive. I know, as you guys have seen, index shows that rate changes are happening and rate changes are going up quickly. And so we're having to adjust as well. So with the small balance commercial, we're looking at about a 1% hike compared to, here and our residential. And then here we're looking at, about 50 basis points or so higher base rate than our residential program. So Does anyone have any questions before I move on to the small balance commercial program? All right. So I'm going to close that out. Give me 1 second here. Now, small balance commercial loans. Now, with us, it's mixed use and multi-family properties from 300K to 3 million. So everything we do at VISIO, it has to have a residential space or a component to it. All right. So like for an office building, we can't lend on any office buildings. Or if it's strictly office building, no, we won't do it. Now, if it's like one of those things you see downtown where there's apartment buildings on top of a retail space, yeah, that's perfect. Right? But if it's strictly office building, we can't do it. Right. 30-year, full 30-year terms, no balloons. Everything is the same, right? Minimum DSCR is 1.2 here for the small balance commercial space. We can lend up to 75%, right? That's the only thing different from the old space. And here, if we do have a mixed use, again, 50% of the revenue must come from, you know, the residential component. But all in all, man, everything is, you know, pretty cut dry, straightforward, right? 680 credit score, property cash flows positively. We'll have no problem lending on it, right? If it meets all the requirements, if the property comes back in condition C3 or better, we don't have any issues. Now, broken conversations works like this. We do 0.5 increments all the way up to 2 YSP, right? We can do a total of 5 points, 2 YSP, 3 borrower paid points. And then we're good to go. So with that being said, that's the programs we offer at VISIO. I'm going to open the floor up one last time for any questions. I left my contact information in the chat. I also left it on the deal I sent you guys earlier, the VISIO program overview. It's at the top. So if you guys want me to run you any quotes for any of your borrowers, all you have to do is reach out to me, give me a call anytime, shoot me an email. I'm pretty quick to respond. We'll walk through a quote together. We'll find some terms and rates that'll, be ideal for yourself and the borrower. So, so if anybody has any questions, shoot.
Do you guys have a quick pricer on your website or anything that we can easily price out, like a DSCR on you?
Not yet,
Or
but you guys will have
is it
access
best
to it. Yeah, you said what? What was that?
It's just best to give you a call and price it out with it. It's just
Yeah,
best
for right
if we get
now.
a deal to give you a call and price it out with it.
Yeah, for right now. So now we're working on our pricer now. You guys will have access to it relatively sooner than everyone else will, but it's still in the beta stage. We want to make sure you guys can move through it relatively quickly. We don't have any problems right now. It's kind of buggy. So we're working on it's closed off right now, but I'll make sure that you guys will, have a login information to that soon. Hopefully we're rolling that beginning of April, mid-April sometime. But as soon as I get it, I will make sure that everyone here has it. All right.
Would you please review the broker comp one more time? I believe you mentioned up to 5 points.
Yes. So we can do, the broker compensation works in increments of 0.5 all the way up to 2 YSP. And then you can do 3 points of borrower paid points in combination with the 2 points YSP. So you can charge a total of 5 points. That help?
Yes. Also, do you have any caps as far as monetary caps on the compensation?
No caps on our no monetary caps on compensation. I think it's point based.
Thank you.
All right, anyone else? All right. Well, hopefully, I answered all you guys' questions at VISIO. I'm looking forward to helping you and your borrowers fairly soon. Try to make it, really quickly so you guys can have the rest of your day. But like I said, it's typically a 680 credit score. Does the property cash flow positively? We'll lend on it. No problems. Now we're looking at a close time of about 30 to 45 days. 30 days once someone gets it into processing, 2 weeks after the appraisal. It really just depends on how fast that borrower can get the information back to the processor. Right. typically that would delay the process. You know, of course, appraisal times, you know, they've been kind of slow lately, but over the last month or so, everything's been kind of moving a lot faster than previous months. Looking at appraisal times, probably 9 to 10 days at the latest. So, you know, like I said, you can give me all the information up front, right? You have a loan application, answer the questions at the bottom, bring me the required documents. Quicker that happens, I can get this deal in the process. All right, now that's pretty much it that I have today. So I appreciate you guys for having me here at NEXA Mortgage. If you want to have a conversation, just give me a call after this. Contact information is in there, the chat, as well as the VISIO program overview. But with that being said, I hope everyone has a great rest of your day. Enjoy the weather wherever you guys are at, and continue to be successful. All right.
Thank you, man.